Are you looking for the best high-yield savings account rates? Well, you're in luck. Recent news tells us the Federal Reserve has been raising interest rates, which has a direct impact on those savings account rates you're after. To give you an example, Ally Bank is known for offering competitive rates in their high-yield savings accounts. This video is all about helping you navigate these changes and find the best rates out there. We'll explore how these fluctuations in interest rates affect your potential savings and what you can do to maximize your returns using like Ally Bank. So buckle up and stay tuned as we dive into the world of high-yield savings account rates. Before we delve deeper into the world of interest rates, let's take a look at some examples of high-yield savings accounts. Ally Bank, as mentioned earlier, is known for its competitive rates. If you're looking for a high-yield savings account with no minimum deposit, Marcus by Goldman Sachs is a good option. American Express National Bank, on the other hand, provides a high-yield savings account with no minimum balance or monthly fees. Discover Bank offers similar benefits with no minimum balance or monthly fees and a high APY. Capital One 360 also provides a high-yield savings account with no fees or minimums and a competitive APY. These are just a few examples of banks that offer high-yield savings accounts. It's important to remember, though, that these rates are subject to change based on the economic climate and the Federal Reserve's decisions. So, make sure you do your research and find the one that best fits your needs. Now let's get back to understanding interest rates and how they affect your potential savings. First off, let's understand what interest rates are and how they work. In simple terms, an interest rate is the cost of borrowing money, or, conversely, the reward for lending money. It's typically expressed as a percentage of the amount borrowed or lent. Now, you might be wondering who sets these interest rates. In the United States, the Federal Reserve plays a pivotal role in determining interest rates. It adjusts the federal funds rate, which is the interest rate that banks charge each other for overnight loans. These changes ripple throughout the economy, affecting everything from mortgage rates to the yield on savings accounts. Recently, the Federal Reserve has been raising interest rates to combat inflation. This means that the cost of borrowing money is going up. But on the flip side, it also means that the rewards for saving money are increasing. This is where the term annual percentage yield, or APY, comes into play. The APY is a percentage that tells you how much you'll earn or owe over a year. It takes into account the effect of compound interest, which is interest earned on both the initial amount of money and the interest it has already accrued. The higher the APY, the more your money grows. Here's the exciting part. As the Federal Reserve raises interest rates, the APY on high-yield savings accounts also increases. So if you're a saver, this is good news for you. Your savings now have the potential to grow at a faster pace. However, it's crucial to note that these rates are variable. This means that they can decrease over time depending on economic conditions and the decisions of the Federal Reserve. So while higher interest rates can boost your savings, they're not a guaranteed constant. Now that you understand how interest rates work, let's look at how this affects your savings. With the Federal Reserve raising interest rates, what does this mean for your savings? In the world of finance, interest rates are a bit like the weather. They can fluctuate, sometimes rapidly, and they can have a far-reaching impact on your financial landscape. So, when the Federal Reserve decides to hike up these rates, it's a bit like a change in season for your savings account. You see, high-yield savings accounts are directly affected by these adjustments. The annual percentage yield, or APY, of these accounts can rise in tandem with the Federal Reserve's rates. Now you might be thinking, that sounds great, but what exactly does it mean? Well, in simple terms, a higher APY means that your savings will grow at a faster rate. Just like a plant soaking up the sun, your savings thrive under higher interest rates. The result? More bang for your buck. Your savings work harder and you reap the benefits. But it's not just about the increased growth. High-yield savings accounts are typically low risk and insured by agencies like the FDIC or NCUA, adding an extra layer of security. So while you're enjoying the benefits of higher returns, you can also rest easy knowing your hard-earned money is safe. However, as with any financial decision, it's important to remember that the rates on high-yield savings accounts are variable. That means they can decrease over time, just like they can increase. This variability is a bit like the ebb and flow of the tides, influenced by a variety of factors including the Federal Reserve's decisions. Now, online-only banks often offer higher APYs and no fees, making them an attractive option for savers. But as with any financial decision, it's important to do your homework. Compare different accounts, consider factors like fees, accessibility, and minimum balance requirements, and choose the one that fits your needs the best. So, Higher interest rates can be good news for savers, but how can you find the best savings account rates? Searching for the best high-yield savings account rates? Here are some tips. When it comes to finding the best rates, the first place to look is at the annual percentage yield, or APY. This represents the actual amount of interest you'll earn over a year, taking into account compounding. A higher APY means more money in your pocket. But yield isn't the only factor to consider. You should also take a look at fees. Some accounts may offer a high APY, but they could also come with high fees that can eat into your earnings. These could be monthly maintenance fees, withdrawal fees, or even fees for not maintaining a minimum balance. So, always read the fine print. Speaking of minimum balances, some high-yield savings accounts require you to keep a certain amount of money in the account to earn the highest rate. If you're comfortable with keeping a large sum of money in the account, this might not be a problem. But if you prefer to have more flexibility with your funds, you might want to look for an account with no minimum balance requirement. Accessibility is another important factor. How easy is it to access your money when you need it? Can you make withdrawals and transfers online, or do you have to visit a physical location? Also, consider if the bank offers mobile banking and how user-friendly their platform is. The easier it is to manage your account, the better. Now, where to find these high-yield savings accounts? Well, you might want to start with online-only banks. They often offer higher APYs and lower fees than traditional brick-and-mortar banks because they have less overhead. Credit unions can also be a good option as they are not-for-profit institutions and often pass on their savings to their members in the form of better rates. Once you've considered all these factors, it's time to do some comparison shopping. There are many comparison tools and websites available that can help you compare different high-yield savings accounts side by side. Take your time to compare the APY, fees, minimum balance requirements, and accessibility of several different accounts. Finally, when you're ready to open an account, you'll need to provide some personal information and proof of identity and address. There may also be a minimum deposit requirement to open the account, so be prepared. Remember, the key to finding the best rates is research and comparison. But what if the rates decrease over time? Worried about variable rates? Here's what you can do. We've established that high-yield savings accounts can offer attractive rates, but there's a catch. These rates are variable, meaning they can decrease over time. This variability is often a response to economic factors, such as changes in the Federal Reserve's benchmark interest rate. So how can you navigate this ever-changing landscape and ensure your savings keep growing? First and foremost, it's important to stay informed. Keep an eye on economic trends and the Federal Reserve's actions. When interest rates rise, so do the annual percentage yields on high-yield savings accounts. Conversely, when rates fall, your returns might shrink. But don't panic. Remember, these fluctuations are part of the game, and there are ways to mitigate their impact. One effective strategy is to diversify your savings. Don't put all your eggs in one basket. Consider spreading your funds across several high-yield savings accounts. This way, if the rate decreases in one account, the others might still hold up. Another tactic is to look for accounts that offer tiered APYs based on balance. The more you save, the higher your rate. This can be a great incentive to boost your savings and could help offset any potential rate drops. Lastly, don't forget the power of online banking. Online-only banks often offer higher APYs and fewer fees than their traditional counterparts. So, if you're comfortable managing your savings digitally, this could be a smart move. While variable rates can be a concern, with the right strategies, you can still benefit from high-yield savings accounts. So, are you ready to make the most of the high-yield savings account rates? Let's recap what we've covered today. We've delved into understanding interest rates and their impact on the rates of high-yield savings accounts. We've explored how the Federal Reserve's decisions to combat inflation have led to higher annual percentage yields. It's crucial to remember that these rates are variable and can decrease over time, so staying informed is key. Then we navigated through the process of finding the best high-yield savings account rates. We learned that online-only banks often offer higher APYs and no fees, but it's important to weigh other factors such as accessibility and minimum balance requirements. And finally, we discussed dealing with variable rates. We emphasized the need for research and comparison before opening an account. Remember, high-yield savings accounts are better suited for short-term savings goals and may have withdrawal limits. Taking all these points into consideration, you are now better equipped to make informed decisions about your savings. It's all about making your money work for you, to maximize your savings and reach your financial goals faster. Thanks for joining us today. Don't forget to like, comment, and subscribe to our channel for more financial tips and advice. Happy saving!